Good afternoon, everyone. Thank you so much for joining us today. Good afternoon. We are going to go ahead and get started on the Dallas home buying webinar. Thank you so much for those of you who are attending, for taking time out of your day to join us. We hope we can provide you some really great nuggets of information and guide you through market, some financing nuggets, and also what's going on here in our communities in Dallas. So to kick off, introducing myself, I'm the Vice President of Sales and Marketing here in Dallas. I've been in the industry for a little over 20 years now, all in new home building here in Dallas, and have been with Taylor Morrison since 2017. So thank you for having me today. Let's go ahead and get started. All right, so what are we going to cover today? We're going to cover about who is Taylor Morrison. I'm going to provide a little bit of a market update. And with market update, I'm going to basically create a bubble around the Dallas-Fort Worth market and really tune out all of the noise that's going on in the national media and the articles and everything that's coming at us to truly understand what is going on here in Dallas-Fort Worth and our current environment in new home building. We're going to go through the new home benefits, finding the best deal. We're going to talk a little bit about money and financing and how to proceed to the next steps, quick move-in homes, and of course, last but not least, going over some of the current promotions that we have here today. We are going to be monitoring the Q&A section, so please, if you have any questions throughout the presentation, pop a question in there. We've got several folks moderating, and they'll be happily to answer your questions. And towards the end, if there are a few questions that we don't get to, we will provide you an email address that you can contact us to ensure that we are answering any and all of your questions. So who is Taylor Morrison? For those of you here in the Dallas-Fort Worth market who do not know, we've actually been in construction for over 100 years. We are ranked now as America's most trusted builder for 7 consecutive years and are proud to have been in the Dallas-Fort Worth market here since about 2016, opening our communities in 2017. We are a national builder. We are in 20 major markets and currently ranked as the 5th largest builder in the nation. We're also proud to say that we're recognized as the world's most admired companies by Fortune and also with Bloomberg Gender Equality Index with a great balance of female leaders, including our very revered CEO, Sheryl Palmer. So let's talk a little bit about the market. What's going on here in Dallas? You know, I want to take the approach and just provide you facts and some data. So bear with me as I go through some data and some metrics, but I hope that it will help you understand what's going on in the environment and really what's impacting builders' decisions in this market and specifically our approach here at Taylor Morrison. We go to a company, especially here in the new home industry, we go to RSI. RSI is a very renowned, reputable consulting agency with analysts and economists, third party that a lot of builders really rely upon, a lot of the data that they gather and provide some guidance and strategies based on what they're seeing in today's market. And that's how a lot of builders make their decisions as well. So what's going on in the market drivers? These are the things that we're going to go through here in the next few slides. We're going to go through the job formation at a record high here in Dallas. Tremendous popular growth, and that's a lot of it's fueled by the relocations. Millennial population continues to climb, and they are entering the home buying sector. I'm sure many of you experienced existing home market is still very short on available inventory, even with the slight uptick in listings the last 90, 120 days. Rental rates, they continue to climb year over year, creating a challenge for many households. And we do know that household income is climbing despite the challenges with record housing inflation and economic inflations as well. So let's take a step back really quick and look at just the Texas economy as a whole. Since the pandemic, what we've seen is that employment is recovering. Since the pandemic of in 2020, February of 2020, we know that the US has now added 1.7 million jobs back into the economy. Texas alone has added 541,000 jobs. But if you look at the bottom here on the right, Dallas has added almost 280,000 jobs of that 540 in Texas alone. It's a tremendous growth of 7.28% here in our economy, which shows the strength of the Dallas-Fort Worth market. When we go conversely, we look at the DFW unemployment. The unemployment rate for the US is at 3.8%, and 4% is considered fully employed. Dallas currently sits at 3.8%. So again, when you've got that kind of job growth, and then we're going to go into the next slide here and speaking to population growth, we're seeing some really strong metrics that's saying our Dallas economy remains healthy. So population growth remains vibrant. So say this 5 times, right? The North Central County Council of Governments, North Central Texas Council of Governments, put together estimates on population growth. And what they've determined just through January of 22 is that 16 of our counties combined has grown in population to a little bit of over 8 million. In 2021 and 2022, 2020 and 2021, we've had almost 160,000 people come into the Dallas market. What's really a huge and impactful metric that we found is Dallas-Fort Worth is now home to 24 Fortune 500 companies. And what's really amazing is that ranks us here in Dallas third. First is New York City, second is Chicago, which is pretty impressive. And 44 of the Fortune 1000 headquarters are also located here in Dallas. So not only do we have tremendous job growth and population growth, we also have a lot of companies bringing their employees here into Dallas, which creates a housing demand. The Rice University Kinder Institute, when they did their projections, they project that by 2030, DFW will surpass Chicago, becoming the third largest metroplex in the United States. That's pretty huge. So let's talk about a little bit of supply. I know we have a lot of our realtor friends here on the call as well, in addition to consumers. But DFW existing home sales, as you can see here through this graph, starting in 2009, right after the last recession, and as we climbed through, and you can see how we were oversupplied to the left of the graph. And really, as we went through the years, we had a lower level of supply. Typically, if you see the dotted line here, 6 months of monthly supply is healthy for our market. So even with the interest rates climbing and slowing demand, we still are significantly undersupplied, not only in new homes, but also in resale homes as well. So you've got 3 driving metrics here. You've got population growth, you've got job growth, and you still have a record low level of supply. At the end of the day, we need more homes to help with these homeowners coming into our market to move into. Going on to the next slide real quick. I'm having some network quality, looks like here. Can we go to the next slide? Can you guys hear me? There we go. All right, so finished vacant inventory. This leads into new homes. So we know we have a record low supply of new home sales, of new home inventory. We also have a pretty low supply of finished vacant inventory with new homes as well. So if you can see here, the healthy monthly supply is anywhere from 2 to 2.5 months of supply in our market. With a lot of builders building inventory in the last 2 years, mainly because of supply chain, we're still well below at 1.1, which again, leading to the fact that we don't have enough homes in this market combined between new construction and resale to really fuel the amount of relocation and population growth that we have coming in here into Dallas. Going on to the next slide really quick. Here's I know a very common question that will typically have gotten the last few the couple of months, and we'll probably get is, okay, with interest rates going down and more inventory coming into the market, when are prices going to go down? And I want to go ahead and address that up front because we're looking at all these market drivers of what's going on, but I want to share the reality of what builders are enduring here in our market. And the reality is that although some of those material costs have stabilized in price increases, which fueled a lot of the last 2 months of price increases, the last 18 months supply chain caused a lot of increase in pricing in raw materials. We had very low interest rates and we had market demand. So, but the reductions have not occurred because of supply chain and cost of production. And we think about, I want to relate it to kind of like gas prices, right? When gas started going up, we were feeling it, every single one of us in our household. We translate that into our industry. Well, it takes gas and oil and fuel to go out and procure raw materials. It takes that fuel to take it into the manufacturing companies. That fuel also is needed to not only produce the materials, but then take it to the distribution centers, and distribution centers then back to all of the new home builders and the subcontractors. So we're not seeing yet that relief in supply chain or in the cost of production that would lead to an automatic price reduction in new home pricing. Subcontractors right now report they have all the business that they can handle for 2022 and 2023. What does that mean? In order to keep up with higher demand or more demand, they would have to hire more folks to try to keep up with all of the housing production. That in tune also creates a little bit of increased prices as far as labor and workmanship as well. We also know that inflating lot development costs have created an era of uncertainty in future lot prices. Just this spring, we've had increasing in prices for development 30 to 40%. So although we've got, interest rates slowing down and calming the demand and calming the frenzy that we just went through the last 2 years, there's not this overall price relief that we're seeing from supply, from materials, and then also from land value going into the future. So that hopefully helps kind of, help you guide in terms of where is pricing going to go towards the end of this year? Are we going to be at pre-pandemic levels? All of the data that's coming in is not showing us to go into that direction. Commodity prices, such as pipe and concrete, has also surged as well, which is impacting the industry as a whole. So going to the next slide, the last component that we're seeing here as well is the DFW rental rates. So rental rates are still climbing, and if several of you on the call are renting, I'm sure you're seeing it just year over year as you're renting your apartment. But what we've noticed is that year over year through July of last month, rental rates have increased by almost 18% with a 93% occupancy. So with 30,000 units being rented out and just in the last year, there's not going to be a relief in rental rates either. So it comes down to, where do you want to spend your hard-earned money? Into renting, where you don't have a long-term investment, or into purchasing a home where you can secure that long-term investment and have something for your family. Like single family, multifamily construction prices have also soared, which again will contribute to those rising rates as we go in through year after year. So what are the benefits of owning a new home? I think we all can appreciate it, which is why we're on this call today, right? To understand kind of what's going on, because we want to own that next home and that beautiful Taylor Morrison home. So we know it's an emotional investment. We know that for you and for your family, it's going to provide that privacy, that freedom. You get to have that sense of a community that you can pass on to your family and to your children and grandchildren. You get to personalize it to your lifestyle, even if you work from home with your own separate office and private space. And you have that, safety and stability for your family. But the practical side of that as well is that you also have that financial investments, right? You make that long-term investment. You know that real estate is going to appreciate higher than inflation year after year. Our market was the first to come out of the recovery and the least impacted 12, 14 years ago here in Dallas. We know that the stability of a fixed payment without concern of rising rents is a huge factor to consider. And then mortgage interest rates are also typically tax deductible for both state and federal taxes. And one thing that I wanted to mention, kind of I think the concern of what's going on today, again, the noise, right, that we're hearing with recessionary talks and things like that. We have to be mindful of where we are today versus where we were 14 years ago, because it's not really a true comparison. 14 years ago, you saw a lot of loans being issued without any sort of income verifications, or no down payments and things like that, which caused a flood of foreclosures, which then led to devaluation of pricing in homes. This is not today. In order to stave off inflation with rising interest rates, we still have a very healthy consumer home ownership background in their portfolios. Everyone has invested hard-earned money in their down payments. Those who have been issued home mortgages have jobs, have employments, and we have a really strong portfolio across our industry, and especially here in Dallas-Fort Worth, that even with increase in rates, it's not predicted to see anything like we saw 14 years ago in terms of devaluation. So as we go through the presentation, I just wanted to mention that we always have a team of experts to help you in every step of the way. So we have our internet home consultants available to you who can answer any questions that you have. They can schedule an appointment for you with our community sales managers. Our community sales managers are your local experts that can help you with the community plans, features, and all of the area. Our design team, construction superintendents, but really another component of our call today that I'm going to pass on to is our loan consultants and Arrow consultants. We have a phenomenal team with Taylor Morrison Home Funding Group, and I'm going to hand it over here to Christy so she can walk you through, and then Darren, on what your purchasing power is today with what Taylor Morrison has available to you. Christy?
Carla, thanks so much. You're so kind. Good afternoon, everyone. Christy Farrow. I am our Vice President over our Florida region, and I oversee our origination team and also assist nationally with our sales training and marketing initiatives, which Carla alluded to. We're excited to share some of that with you today. So I'm going to kick off the financing portion of today's webinar and just really talk about what does it mean to be part of the Taylor Morrison family. And, first and foremost, I think most would agree that just the thought of buying a new home is very exciting, but to be completely honest, the financing side of purchasing a home isn't really the fun part. And that's just me being completely transparent, but we try to make it fun here at Taylor Morrison Home Funding. But whether you're looking to buy your first home or maybe you've kind of been there, done that, buying new construction is definitely a unique experience compared to purchasing a resale home. And Carla mentioned, having the team of experts with construction, financing, and closing all under one umbrella is really a great path to ensuring that you as the customer have a phenomenal experience while you're building your new home. And that one-stop shop does relieve that burden of communication between the builder, the lender, your title company, and a realtor if you're using one. But in addition to our mortgage services, we also have an affiliated title company, Inspired Title Services, as well as Taylor Morrison Insurance, which offers very competitive homeowners insurance premiums as just another option when it's time to shop that. But all of our departments at Taylor Morrison truly work hand in hand and really just want to ensure that your financing is ready when your home is. So being parallel with construction and being lockstep is so extremely important. And as Carla mentioned, your home purchase is both an emotional and a financial decision, and just appreciating that it is the largest purchase that your family will likely ever make. So over this next segment of our webinar, I am being joined by Darren and Deandra from our team. I'm going to touch on some high-level loan qualification components. We'll share some information about our Aero department, Able, Ready, Own. And then last but not least, we'll introduce you to Dorothy, and that is our mortgage technology platform. So, again, if you have any questions along the way, just feel free to put them in the chat, and we've got some moderators on the call with us. So appreciating that some of you may have currently owned a home, or you previously have owned a home. We also may have guests that are first timers. So just giving some basics to loan qualification. And just a reminder, and Carla, thanks so much for bringing up from 14 years ago and how we really anticipate any changes in our cycle to not be anything mirrored of 14 years ago, to exactly what you're saying. And it does boil down to these 4 components of mortgage qualification. And you will hear to it referred to in the industry as the 4 C's. I prefer to compare it to the 4 legs of a chair. So, likely most of us wouldn't just knowingly sit in a chair with wobbly legs. Sometimes we do by accident, but mortgage lending we see very similar. So making sure that your qualification components have those 4 strong legs provides the stability that we need to move forward on our lending decision and ensure that you're going to be stable in your home for years to come. So when we're lending hundreds of thousands of dollars, we do have to understand these 4 items, one being the collateral, the value of your property that the loan is being secured against. We also need to understand that you have the ability to save funds to purchase your home, that you're going to be able to repay your loan over the long term, and then of course whether or not you have that strength and credit history to make sure that you pay your debts timely. So we'll touch on each of these individual and just give a general understanding of the qualification, and then hopefully that may assist some of you in just realizing and discovering where you are in that journey to home ownership. So for those of you that do have qualification top of mind, we will move on and touch on our first, which is going to be collateral. And collateral, of course, is the appraised value, and appraisal reports anytime you're getting a loan will be required. If you're paying cash for your home, obviously that's not going to be something that is going to be necessary, but for lending, the reports are completed always by an unbiased third-party licensed appraiser, which also back 14, 15 years ago was not regulated that way. So we can ensure that there's no influence that's given by us as the lender, for example, or even you as the home buyer. So we have to make sure we're lending appropriately to that value. And then you, of course, want to be sure that you understand the value of the home compared to the price you agreed to pay when you went under contract. And so what is used when the appraiser is putting that report together are going to be closed comparable sales from like-sized properties, and they're used to establish that value. That's not going to be homes that are under contract or pending that closing. But on that rare occasion, we will see an appraised value that may come in below purchase price. And we have a lot of ways to resolve that through financing. Most times an increase in the loan to value against the price has zero impact to a consumer's financing. But if there is an impact to financing, we have ways to resolve through additional incentives to cover upfront mortgage insurance. If for some reason your loan to value did raise above that 80% threshold, that can be paid at closing, so you don't ever have to have that on your monthly payment. There could be assistance with cash to close should more down payment be needed to meet those loan program guidelines. So what we do try to be careful of is that when you're going and reducing price to mirror a past closing, it really isn't always the best option for you as the consumer, because it could truly have that potential domino effect through the entire community of home depreciation. And we have seen national home prices, of course, appreciate very much over the last 2 years, 9 and 15% respectively from a national level. And although those rising interest rates that Carla mentions, they have slowed our new and existing home sales, and that is due to the rates and due to the buyer affordability, it is truly anticipated that we should level out to those historical averages of about 5% appreciation per year. So again, we don't expect that significant correction to the market similar to the housing crash of 07 and 08. And it really is truly due to that prudent lending and giving borrowers credit for loans who can truly afford to purchase and hold that strong equity in their home. So moving on to that, in order to buy your home, we got to get that second leg straight with cash and down payment. And we do have to verify source of funds that you need for down payment, and also any of the settlement costs that are needed to complete the home purchase. The maximum loan amount is always going to be determined by your sales price or appraised value, whichever's less. And we give an example up here on this slide. And our minimum down payment will vary by your loan product and or occupancy type, whether you're buying a primary residence, perhaps you're buying a vacation home, or you're buying a rental investment property. So the guidelines that are established for where your down payment funds can originate from, we have included on the slide both the acceptable and unacceptable sources for down payment. So you just want to make sure, if you're preparing to go under contract and looking to buy, that we're able to source those transfers of funds in and out of any bank accounts. You may have deposits that are not related to payroll. And as long as you can source those through a paper trail between those accounts, or perhaps a gift donor, or you're selling real estate and using those proceeds, you just want to be able to source it. So my only bit of advice on this slide is to take note, and any cash that maybe you've been saving under your mattress to buy your home, you might get a little wobbly on that chair. So just a couple things to note there. And staying in line with cash down payment, there is an earnest money deposit that is going to be required when you go to contract to buy a new home. Now, Taylor Morrison has a required deposit, and it does vary by community and by market, but the earnest deposit you give in the beginning is going to be applied towards your down payment when your home closes. And if you're obtaining financing versus paying cash, we also have to source that earnest money as your down payment prior to closing. So if you have any unique circumstances that you're just unsure about, we've got a team of local loan consultants, Darren will talk about that in a little bit, that are always available to answer any of those questions. So beyond that down payment, I mentioned settlement costs, and I did a little bit of research, and in Texas, you can pretty much count on a rule of thumb for Texas closing cost and prepaid items to range anywhere from 2 to 4% of your purchase price. And those costs include things like lender and title fees. There's government fees, transfer taxes. You've got prepaid items, which is going to be your homeowner's insurance up front, and then setting up an escrow account for those real estate taxes and insurances along the way. There are loan programs that certainly allow the tax and insurance escrows to be paid on your own annually and separate from your mortgage payment, which would reduce some of those costs at closing. The majority of our Taylor Morrison communities do have homeowners associations. So some communities have startup costs that might be related to the closing as well. Interested parties in your purchase are they're listed up here. They're going to be your seller, your lender, and your real estate agent. And although they cannot help contribute towards a down payment to buy a home, they absolutely have the ability to assist with some of those additional costs that are associated with financing. So for example, if you have a real estate agent who may want to contribute a portion of their commissions, or your lender can provide a credit at closing. But I will say, and we're excited to share with you later, that all of our Taylor Morrison communities do provide a contribution towards financing as an incentive when you use Taylor Morrison Home Funding. We, on the mortgage side, double down on that with a lender credit. There are maximum limitations, however, based on the percentage of your sales price, and that is going to be based a lot on your loan program and your down payment. But a lot of times with the incentives that are given, we can cover the majority of those costs or use them in other ways. And we'll kind of show that to you in just a few moments. And then the last piece that I'm going to share with you is going to be our third C in our building of our chair, which is just your employment and income. And that just simply refers to your ability to repay your mortgage through job stability and the likelihood of that income continuing. It is kind of a myth that we're looking at net income. You know, we'll talk to customers and they'll pull up their pay stub and tell us what their net take home is. And we're actually looking at gross income. So before federal and state taxes, which in Texas we don't have, and I live in Florida and we don't have. So that's just another great reason to move to the great state of Texas without state taxes. But we will look at the gross, and Darren's going to hit a little bit on monthly income and debt and how you can kind of understand that max spend against your income when we look at qualification. When we're talking about job stability, just rules of thumb, typically to your job history in the same line of work, doesn't have to be the same employer. Carla mentioned we have a lot of transfers coming in to the Dallas-Fort Worth area, and we do make exceptions. So you may have a family situation where a spouse took time off due to what's happening in their family, or there could have been a hardship that took place that causes a gap in that employment. And if you're reentering the workforce, we can certainly consider that in qualification and use of income. Self-employment can get a little tricky, but we do require up to 2 years of tax return income, and we do average that over a 2-year period. And an income analysis of those returns is just a little bit more complex than just simply looking at W-2 wage earnings. And we take that deeper dive to just understand write-offs and determine that qualifying income. So if you do fit that category, or you're a 1099 employee, a contract employee, and have specific questions, I'm going to just right out the gate encourage you to reach out to our team of licensed loan consultants who would be more than happy to answer questions, review any documentation, and just kind of get you to that right place to understand your buying power. And Darren will talk about our team in just a few. But I'm going to pause there and take my breath, and I'm going to let Deandra take us home with our fourth important stable leg of the chair, which is going to be credit, and also tell you about our valuable Aero department. So Deandra, off to you.
Thank you, Christy. My name is Deandra Avalos, and I've been in the mortgage industry for 22 years. I was fortunate enough to find my home with Taylor Morrison about 14 years ago. To say I was excited when presented the opportunity to be a part of the Aero department when it was first envisioned about 11 years was an understatement. I get to educate buyers on the ins and outs of credit and help guide them to their new front door and achieve their dreams of home ownership. Credit is like a thumbprint in its uniqueness, meaning no two customers' credit profiles are the same and each one tells a story. When looking at credit scores for a mortgage, we'll pull a tri-merge credit report, which simply means a report from all three bureaus, Equifax, TransUnion, and Experian. Residential mortgage credit reports will many times score differently than a consumer credit report, and the qualifying credit score For loan approval, interest rate and mortgage insurance premiums are based on the median or middle credit score. If one or more of the borrowers on a mortgage, it's going to be the lower of the middle scores between the both of them that are used for qualifying. Primary score factors. And this visual just provides a look at what factors make up your overall credit score. And as you can see, 65% of your credit score is based on timely payments and overall credit utilization, which just simply means how much you owe against how much available credit you have. Next would be the age of your credit history, followed by new credit and the mix of credit types, like student and car loans, revolving debt, and mortgages. There's quite a bit of information on this slide regarding credit basics. I'd mainly like to touch base on the difference between a soft inquiry and a hard inquiry. There's a lot of myths about credit inquiries, but a soft credit pull does not impact your scores. That would include things like a pre-approved credit card, checking your own score with the bureaus, and employment verification. A hard inquiry would happen when you directly apply for credit cards, any type of loan like student loans, car loans, mortgages, or even a personal loan. These inquiries will remain on your credit for 2 years and could cause small incremental decreases in your overall score, but on average, it's less than 5 points. Only 14% of consumers lose more than 10 points because of inquiries, and 89% of the time, inquiries aren't even one of the top 4 factors impacting your credit score. So when shopping for big loans like a mortgage or a car loan, you won't get an incremental ding if you're shopping around within a 14 to 45 day time frame of that initial inquiry. You may have already gone through a pre-approval with another lender and you might be concerned about another inquiry on your credit report. However, when you pre-apply for a loan with Taylor Morrison Home Funding, we will only do a soft credit pull, which provides us 2 of the 3 scores. Once you make the decision to purchase a home and move forward with your formal loan application, then we would generate a tri-merge pull with a hard inquiry taking place. We'll be sending out this presentation for you to review all the credit basics, but I'll quickly mention again that employment, income, and bank balances have no impact on your score. But as Christy talked about earlier, they are both main factors in your loan approval and typically indicate a strong payment history. Taylor Morrison Home Funding has a department designated solely for qualification improvement and loan enhancement. Arrow, or Able Ready Own, offers a personalized strategy to help enhance credit and provide guidance and education to assist customers on a path to home ownership. Arrow isn't only for those seeking credit score improvement to gain loan qualification. It's also for those with great credit seeking score enhancement, which may provide additional financial benefits with rate improvement and or decreased mortgage insurance premiums. Arrow is a complimentary service for both prospective homeowners as well as those already under contract to close on a home. You are under no obligation to purchase a home, and we tailor a path specific to your needs. After pre-applying with Taylor Morrison Home Funding, your loan consultant can enroll you in our Arrow program, where we will run credit simulations based off your tri-merge credit report and provide a personalized path based on your needs. Arrow isn't classic credit repair, meaning we will not speak directly with creditors, and it does require customer participation in order for you to complete our Arrow program and become an Arrow graduate. Some examples of Arrow recommendations would be suggestions to open a new account, be added or removed as authorized users, pay off accounts or reduce balances. If you've applied with Taylor Morrison Home Funding, our Arrow consultants are familiar with your financial profile and work hand in hand with loan consultants and Taylor Morrison to ensure we are not making recommendations that would hinder your ability to purchase, such as utilizing your down payment funds to pay off debt. We engage with you and help you stay on task with open communication by phone and email. In the last year, we've assisted hundreds of families with an average time enrolled of less than 90 days. And over the last 10 plus years, Arrow has helped over 4,800 families achieve the dream of home ownership through qualification improvement while also gaining financially through score enhancement. If at any time you think we could be of assistance, you can start by reaching out to your loan consultant team. And with that, I'll turn the mic over to Darren to share more about our team here in Dallas and how to get started with Taylor Morrison Home Funding.
Thank you so much, Deandra, for that. And good afternoon, everyone. And thank you for joining us today. My name is Darren Haber, and I have been in the builder mortgage industry for a little over 20 years now as well. And I've had the good fortune of being a part of the Taylor Morrison Home Funding team since 2019. My current role as a regional VP, I've been provided the privilege to overseeing 3 different markets of Austin, Houston, and the Dallas market as well. And I get to work with this amazing team that I'll speak about here in just a little bit. I wanted to take a quick minute though and expand upon that arrow that Deandra just touched on, the Able Ready Own program. And we recently had an example that I wanted to share. While Deandra talked about being able to increase a buyer's profile and credit score, we had a buyer who was interested in doing a rate lock. And so we got her on the call and we started looking at the profile. And while I was looking at the profile, I noticed that they had a 702 credit score. And they were looking to put 10% down on a conventional loan, which is a pretty typical loan for the Dallas market. And the pricing for that day would provide the buyer a 5.87% interest rate, which in today's market is actually not a bad rate. However, with the help of Arrow, we were able to get this buyer's credit to go from 702 up to 742, so a 40 point increase, which then would provide the buyer a 5.5% interest rate. So that difference of 5.875 at the 702 score, and now we got a 5.5% rate at the 742. So that interest rate difference gave our buyer a payment difference of $128 a month, which when you equate that over an annualized basis, it takes it to over $1,500 a year. And if you were to take that over the life of the loan of 30 years, that individual saved $46,000 by just increasing their credit score 40 points. And so, as Deandra mentioned, the rate range for credit scores is pretty broad, but 700s people think is good. But if you can get above that 740 number, it really can get you the top tier pricing. So something to consider, and really impressive job by our Arrow team. So let's talk about what mortgage suits your needs. So Christy and Deandra both discussed the basic loan qualification criteria and provide some really good tips on credit score enhancements. But now we're going to touch on briefly the most common loan products that are out there, including some of their overall features and benefits. Okay, so this slide here contains a lot of information, but we'll make this presentation available to you after the call. So starting with the conventional loan, a conventional loan is a non-government loan and is our most common mortgage product in the Dallas market. There's a typical expected down payment of around 20%. However, you can put down as little as 5%. There are actual conventional financing options as well. They can allow up to 97% loan to value or only 3% down for first-time home buyers that qualify. Lastly, conventional loans have a maximum loan amount of $647,200, and that number is adjusted annually by the government. We'll move on now to the VA and FHA loans. These are both government agency loans, and so the VA loan is an excellent loan product for those members of our active duty military or veterans, and it is specific to them only. There is a little to no down payment required for a VA, so they can do up to 100% financing. And it does have additional flexibility with higher debt to income requirements, which is a great feature in comparison to some of the conventional financing. Moving to FHA loans, an FHA loan is secured by the Federal Housing Administration and requires only 3.5% down. So a common myth is that FHA loan is only for first-time home buyers, but that is not the case whatsoever. We use FHA loans quite often in many different scenarios where we might need a little bit more flexibility on a buyer's profile due to credit score and or affordability, the debt to income ratios. There are some loan amount restrictions based on the county loan limits. And so for Dallison specifically, it is 450,800. So that would be your max loan amount in the Dallas market to do an FHA loan. However, there is, again, flexibility when it comes to that debt to income ratio and credit scores. So it is a great viable option. And lastly, nearly 11% of all of our mortgages for the Dallas market fall into that government category. Lastly, I want to talk about jumbo loans. This is a rising loan product that we've seen as far as utilization goes. And it's up to 5% of our current closings, but 17% of our current backlog is utilizing this due to the rising prices. So jumbo loan is a loan that has a loan amount above the Fannie Mae and Freddie Mac, and those are quasi-government agencies who buy most mortgages. So it's a loan amount that's above the $647,200 limit. These loans are typically offered by institutional investors and a lot of banks. These loans are designed to meet the needs of high income earners who are purchasing a higher valued home. And it is a great option to have instead of having to buy your loan amount down to that conforming loan limit. These are most common loan types available right now, but we do offer many, many more loans that are available, whether it be fixed or an ARM. We have many different products through Taylor Morrison Home Financing to meet all buyers' needs. So moving on, total housing payment. So how much can you afford? Let's discuss affordability. So what makes up a total housing payment? There are basically five key components to a housing payment. It's your principal and interest, your property taxes, which for those of you who are not in the Texas market, there are some pretty sizable property taxes in the state of Texas. Homeowners insurance, we have mortgage insurance if it's applicable, which means that you're not putting 20% down. And then there's also some homeowners association dues, or HOA dues as they're known, which are paid separately from the association versus the lender. So those are the total five components that make up your payment. So how much can you afford? Well, we've mentioned debt to income ratio a couple different times now, and it's definitely a critical piece of our loan approval. So your debt to income ratio truly tells the lender how much you can afford. It's as simple as that. The debt to ratio calculation compares how much you owe on a monthly basis against how much you actually earn. But when looking at this, we look at the gross pre-tax income. The lender wants to be certain that after paying your new mortgage and credit obligations, that you have money left over to pay your other expenses. So this includes your federal and state income taxes and your basic needs such as food or clothing, childcare, and utilities, things of that nature. A solid rule of thumb is that not having your housing and monthly credit expenses be above 40% of your gross income. As we talked about earlier, you have different ratios that we want to apply to make sure that buyers can afford. So that 40% rule would be all of your debts into your income. However, with that said, we do also have programs that do allow for higher than the 40% and can go up to 50% with some government, i.e. the FHA and or VA financing. We can even go a little bit above 50% at times, depending on each individual buyer scenario. Typically, to justify those higher debt to income ratios, though, you would need to have some compensating factors. And what I mean by that are good credit, lots of reserves in the bank, and so forth, your propensity to pay your bills on time. So if you wanted to calculate your own debt to income ratio, you would consider your proposed new housing payment. So what you're going to be paying for your new house. As we mentioned, it was the principal, interest, tax, and insurance. Okay. And only your monthly credit expenses. So what does that mean? Well, your housing payment would include the monthly principal interest, as I just mentioned, homeowners insurance, taxes, and then mortgage insurance, if that is applicable. And then what you're going to do is you would then add that to your minimum monthly payments reported on your credit report. So for example, if you have a credit card bill that you have $1,000 out in debt on, but yet your monthly payment is $40 on that $1,000, you would only incorporate that $40 payment in because that is your required piece of payment. You would then divide that amount by your gross monthly income. Again, I emphasize the gross because it is prior to taking the taxes out. This ratio will then help you and the lender determine your personal affordability ratio. So what you can afford, what you're comfortably able to afford, and does it fall within the guidelines? One thing to keep in mind is that expenses like groceries, most utilities, gas, childcare, and etc. are generally not included in this equation. Okay. Moving on, we're going to talk about Dorothy, and Christy had touched on this earlier. This is our technology that we utilize, and it's really cool, and it's kind of state of the art. We're pretty proud of it. So at Taylor Morrison, we understand that, obviously purchasing a home is not something that happens often, and typically one of the largest emotional commitments and financial commitments you're going to make in your life. So we want to make sure that we do it right and provide you additional guidance on how to get there. So as we talked about the basic mortgage qualifications, we introduced you to the Dorothy, right? So Dorothy is from the Wizard of Oz. Yeah, that's right. That's the red slippers there. And Dorothy is here to help you, lead you down the path, your personal yellow brick road, and provide you state-of-the-art secure mortgage technology. And I emphasize that secure is a encrypted secure system. Dorothy also works alongside our local Dallas team that are local there in the Dallas market that are available via email, text, phone. They can meet in person as needed to bring you the utmost superior home buying financing experience. And we like to couple that with the technology that's available to you. With the protection of the industry standard encryption technology, as I mentioned, you can trust Dorothy with anytime, anywhere account access. And you can secure document transfer alongside real-time information. The portal that you will be utilizing is amazing, and it's easy to use, very simplistic for you to upload things. You'll get tasks associated with it that keep you alert on what's happening with your loan. It's just a great real-time type of loan system that we have available to you. So getting started, are you ready? If so, let's get ready, and you can do a couple different things here. We can get you ready. You can pre-apply. If you're possibly considering our Aero services, as Deandra mentioned earlier, or just simply want to talk to a mortgage professional, we can help you with that too. You can get started by going to the taylormorrison.com/home funding financing, that website that's listed on the page right now. And if you are seeking Aero counseling, you can start with one or our professional loan consultants who can run a credit simulator for you, and they will connect you with one of the Aero consultants. So to create that right path for that towards purchasing a new home. And as you can see, we have highlighted this different sections on the website on the page right here that will help get you to that link. Now, if you just want to pre-apply for financing and gather some details on what you would qualify for, so some just basic questions, simply go to Start Your Journey, which is in the top of the center page underneath the started word there. And you will select your area that you want to purchase in and the community that you're interested in. Okay, and then you'll be prompted through there some questions that are friendly for finance, so that your loan consultant, when they get your application, they will then see exactly what you're looking for. Once you submit that, one of the local loan consultants, as I mentioned, they are local in Dallas and are readily available. They'll be back in touch with you very quickly to hopefully answer all questions that you have at that time. Don't forget, as this question comes up a lot, we only look at soft credit inquiries. So if you're doing a pre-approval, we are going to do 2 of the 3 credits pulls, but it is a soft inquiry, not a hard. Therefore, it will not impact your credit score as a lot of people think. Once you make an application, there will be a hard credit pull inquiry, or if you're using Aero, they will also need to use that to make sure that they have the right path for you. Now, if you just have some general questions and want to talk to someone without doing a pre-approval or doing the Aero, you can also click on the Talk to Us button at the top. And that is right underneath the link that's posted on the website or on the screen right now. From there, one of the local, again, Dallas local loan consultants will directly reach out to you. And you should hear from them within just a few business hours and they all get the message that comes out that there's an inquiry out there waiting. So they will help with you. So with that said, let Dorothy lead the way. They'll take you down your yellow brick road. We are very grateful for all of you who joined us today. So I want to thank you personally and truly hope you found the mortgage content beneficial. At this time, I'm going to turn it back over to Carla. Carla, the floor is yours. Thank you.
Thank you so much. That's such great information. Thank you, Christy, Deandra, Darren. Hopefully that gives you a lot of great information to get your journey started. And the one thing that we're very proud of here at Taylor Morrison is all of the amazing tools that we have worked so hard to put together to have information, accessibility, and convenience just at your fingertips. And we are the industry leader in it. So how do I get my home buying journey started? Well, of course, you can visit Taylor Morrison Home Funding. You can walk that yellow brick road with Dorothy to understand what your purchasing power is. Or you can even start by using one of our available online tools. You can take the virtual tours, visit our website, connect with our internet homes consultants, and just kind of understand what's out there in our communities today. I encourage you all, if you haven't yet, to please go online and visit Taylor Morrison website. You can see all of our communities, our quick move-in homes that are available with pricing information. And on the next slide, we can even show you something that we are very proud of here, that if you've walked that yellow brick road and you've spoken with our loan consultants and you understand kind of where you are and what you're most comfortable with your budget, you can even do an online reservation system just sitting at the convenience of your couch at home. You can visit any of the communities that best fits your needs and lifestyle. And then from there, you can make a home site reservation and essentially build your home online in terms of choosing the home site, the plan, the structural options, and understanding what your initial contract price would be. Or if you're interested in one of our quick move-in homes that are available, you can even tap or click, on one of those homes. And from there, you could actually reserve it, take it off the market, and have our community sales managers contact you directly. And you can begin your home buying journey with a purchase agreement at that time as well. It's all at your fingertips. So please set that virtual or in-person appointment to visit one of our communities. I know we have here a lot of our customers and real estate agents, so I just want to mention that please ensure that as a customer, once you visit our community, to ensure that you do identify your real estate agent who's working very hard for you as well, to make sure that we can start the process and communicating with all parties. If you are a real estate agent on our call today, I encourage you to please ensure that your client is mentioning you as their representative, or please feel free to call or email our community or internet home consultants, and you can go ahead and register your client as well, so we can go ahead and get that taken care of. Once you have visited our community, within 48 hours, we do need that information registered in our system. From there, we'll go to the next slide. All right, if by chance you have a home to sell, great news. We have an exclusive partnership with OfferPad that will help you through that journey and make it as convenient and easy as possible for you. You can go to offerpad.com and receive a free offer within 24 hours. Huge benefits. As you can see here, you have no showings you have to worry about. I know I try to list my home with 3 kids, and that was not fun every morning trying to get out of the house. No repairs that you have to manage through. There's not going to be any surprises. You know exactly what your offer is up front. The beauty of it, especially as I know you've all seen it the last couple of years with construction delays, you can align those closing dates of your current home and when your new home closes to time out within 9 months and maintain that flexibility and change the date as needed as we continue to keep that communication open with you in terms of how your new home is progressing. Additionally, you could even not have to worry about move twice, because you can have OfferPad close on your home and lease it back from them for up to 6 months with an extended stay. And icing on the cake, you get a free local move that's paid by OfferPad. So a great tool that's available at your fingertips as well if you have a home to sell. All right, so let's talk about incentives. I know many of you are probably anxiously awaiting to kind of understand, how does this all time out with what's going on here in Dallas? The lack of supply, the population growth, everything going on, interest rates rising. What can we all do? Well, here in Dallas, we do have incentives, and what we've determined is right now the biggest thing that we can do, the biggest benefit that we can provide you is to provide a substantial amount of money to really improve your purchasing power in terms of financing. So we have up to $65,000 of financing incentives that are available to you. And how does that work? It's going to be about 6% of your purchase price. So depending on what purchase price you're at, it can be $30,000 in finance incentives, or it can be up to $65,000 in that higher purchase price. And there's so many amazing ways that you can use these finance dollars that will alleviate that month-to-month payment as you move in and live in your home. And I'm going to turn it back over to Darren real quick because he can go through some of those benefits.
Yeah, no, thank you, Carla. And wow, 65,000, that is an amazing number to be able to apply to your financing needs. Starting off, closing costs, that's a dollar for dollar out of pocket cost to all buyers, right? And they can be quite a bit of money. They can be 2 to 4% of purchase price. So why would you want to come out of pocket when maybe you could use this incentive to cover your closing costs and maybe put more money down? Or maybe keep the money in your bank so that you have it for future needs. So closing costs are something we certainly would take a look at and covering the costs associated with that. Permanent rate buy down, right? What does that mean? Well, we could get your rate a lot lower with that kind of money. There's a rate that is much, much lower than the current market rate that we could offer up to you so that you could be more comfortable with the monthly payment. And as I showed in the beginning example of what an interest rate differential can do, over the life of a loan or even just a year's time, you can save a significant amount of money with having a much lower rate. So great option there as well. Temporary buy downs, these are really kind of unique to each individual buyer. And there's a lot of different reasons why one would use one, but they can range anywhere from, your spouse is going out on maternity or paternity leave, and so you're not going to have the full income. You're going to take some time off from work. There's just a plethora of reasons why maybe you're expecting a job, raise in a little bit, and you're going to have more income. So you want a lower payment right now to comfort your current income. So there's plenty of different reasons why we would be able to apply a temporary buy down to rate as well. And really all that is subsidization of dollars per month that we would apply to your monthly payment to get you that lower payment based on the lower rate. A couple other options would be mortgage insurance for those who are putting less than 20% down. We would have the ability to buy that mortgage insurance outright. And so we can do that on conventional loans, and we can do it on FHA as well. FHA, there's a little bit of a difference because you're paying out the upfront, but there is still a small monthly one. But the bulk of the Dallas buyers do tend to use conventional, so this is more applicable to that loan type. And so therefore, we would be able to pay for that. We would be able to pay for mortgage insurance. So maybe instead of putting 20% down, you put 10 or 15 and you have mortgage insurance, but we pay that outright. And therefore, you don't have that monthly cost associated. And then lastly, we do have long-term rate locks. I did see a couple questions around that earlier in the chat, and it is a viable option. We can rate lock all the way out to 1 year's time. We have all different ranges, and pricing does vary based on the term of the rate lock. And there could be fees associated with the longer term locks, but we do have the comfort of being able to cover that cost so that you can get your rate solidified today, knowing that a year from now, your payment will remain the same as that time of lock. This next slide here shows a couple of different options, and we're not going to go into great detail over the numbers, but we did want to show a couple examples. If you look at the top right on the left-hand grid, it shows compared to a $39,000 price reduction. So if you were to take just the price reduction, what would that do to your monthly payment? You would have a $3,194 payment. However, if you look over to the far left-hand side, it shows an example of one of those permanent rate buy downs that I just referenced, where your monthly payment now is $2,921. So significant difference in what you would be paying. And again, if you start to annualize that or even take it further out over the life of the loan, the amount of dollars that you're saving is well much more significant than a price reduction would apply to that overall financing. So something to just keep in mind. We have many different options that we can apply, whether it's permanent, temporary buy down, MI buyout. There's just a lot of different ways that we can get you a much more comfortable monthly payment and retain the equity in your current home value.
Thanks, Darren.
Carla, I'll turn
right.
it back over to you. You got it.
Thank you. All right. So we know there's a lot of quick benefits of a quick move-in home. We can lock in that interest rate is what Darren mentioned. You can go ahead and move into your beautiful home right away and be in before the holidays. And of course, we know that a new home is going to provide you a better warranty than a resale. So the icing on the cake, as we can wrap up here on the next slide, we've got a couple of promotions here that you, for attending and taking time out of your day for an hour, a little over an hour here to spend with us. We've got a couple of notes that I want to mention, and one is for all of our quick move-in homes that will close, that will contract by September 30th and close by December 31st. There is a $20,000 price incentive that gets applied at the time of contract. So not only do you get up to $65,000 in finance incentives and potentially lower your mortgage payment by hundreds of dollars, you also get a $20,000 contract incentive. And for just attending this webinar, we will email you this particular coupon. If you purchase between today and September 30th, you receive a 2-inch faux wood blinds package throughout your entire home. So to get it all set up and ready for you. So I encourage you to please contact our internet home consultants or go out there and visit our communities. As I mentioned earlier, with a lot of the fun data that we had for the Dallas market, now is the time to buy. So come and see us and let any of our experts help you in any way that we can. And thank you for trusting us as well. Any other questions that follow through, please, you can email at dallasonline@taylormorrison.com, and it will be funneled out to any of our experts here that can answer any of your questions. Thank you again for your time, and I hope you have a wonderful week.
Thank you, Carla.